Once you log into the software, you'll be taken to the home screen. Here you click a new return stamp, choose your name from the tax prepare drop-down list, into your client's first name and their last name. If you're doing training return, click the training return box. Please be sure not to check this box if you're doing an actual tax return. Click submit. Then you will be in a refund estimator screen. The first section is the taxpayer spouse and dependent information. Number 1 is for the filing status. You 5 options: single, married, filing jointly, married, filing separately, head of households and widower. A filing status is used to determine a taxpayer's filing requirements, their standard deductions, eligibility for certain credits, as well as the correct tax due for their income. There are 5 different options. You have single, this is unmarried, divorced or legally separated individual. There can be numerous individuals in a single household that can claim this status. You have married, filing jointly, this is a married couple filing their tax return together. Married, filing separately, this is a married couple that will be filing 2 separate tax returns. Head of household, this is unmarried individual who must have paid more than half the cost of maintaining a home. There can only be one per household that claims this filing status. And you have widower, this is an individual whose spouse has died within the last 2 years. Who has an independent child to claim. Next is the taxpayer birth date, and the taxpayers can be claimed a dependent on another taxpayer's tax return. Check the box indicate. This is important to check this box. If it is a dependent may be required to file a tax return if they received income within a certain range. This range is determined about with the different factors. One includes whether the income is earned versus unearned. Earned income apply working for someone on their own business. Unearned income means income that is collective but did not require work, such as unemployment or collecting interest and dividends. Additional fact is that it determines the income range would be if a dependent is single, and married if the dependent is 65 years older. Or blind. The current income ranges are listed here for the upcoming next year and can also be found on irs.gov. If the taxpayer's filing with an ITIN number and not a Social Security number, check the next box. An ITIN is an individual taxpayer identification number that is issued by the IRS. It looks exactly like a Social Security number but always begin with a number 9. It is issued to individuals who are not eligible to receive a Social Security number but are required to have a taxpayer's identification number. You'll likely encounter this when dealing with non-resident and resident aliens. Enter the spouse date of birth if the taxpayer is married, filing jointly, or married, filing separately. If the spouse can be claimed as a dependent on another tax return, please be sure to check the box. That indicates this. The next section is for the number of dependents that the taxpayers claiming on their tax return, and box 1 enter the dependent children and the relative that live with the taxpayer. In the second box, either the dependent children not living with the taxpayer, due to separation or divorce. In the case of a dependent divorce of separated parents, the custodial parent is the parent that the child lived for the greater number of nights during the year. The other parent is the noncustodial parent. The custodial parent is a parent who has the rights to claim the dependent on their tax return as a qualifying dependent. Now the child can be claimed by the noncustodial parent if the parents are divorced or legally separated or live apart at all time within the last 6 months of year. Whether they were married or not, the child had to receive over half of their support from the parents, and has to be in the custody of at least one of the parents for more than half of the year. Now the noncustodial parent is allowed to claim the child. The custodial parent must use a Form 8332 to release their acceptation to the noncustodial parent. This has to be attached to the tax return. enter the number of dependents that does not fit the first two descriptions. In the last box, a qualifying relative does not have to live with the taxpayer to be claimed as dependent on their tax return. For additional taxes assumption, these relationships are their children, stepchildren, foster children, grandchildren, their brothers or sisters, nephew, nieces, their parent, aunts, uncles, son-in-law, daughter-in-law, father-in-law, mother-in-law, brother-in-law, and sister-in-law. The next section is to calculate the child tax credit. Enter the number of dependents from Section 2 that are age 0 to 16. At the end of the tax year, the child tax credit is a credit that is up to $1,000 per qualifying child. If the taxpayer qualifies to receive the credit, the dependent must be 0 to 16 years old, and be the taxpayer's child, stepchild, foster, child, sibling, grandchild, or niece, or nephew, and have lived with the taxpayer for more than half of the tax year. The next section calculate the earned income credit. In Box A, enter the number of children who are under the age of 19. In Box 2, enter the number of children who are age of 19 to 23 and full-time college student. In Box C, enter the number of dependents who are disabled. It does not matter the age, it will add up the number of dependents from other boxes. In order to receive the earned income credit for dependent, there must be an EIC qualifying dependent to be a qualifying dependent. They must be the taxpayer child, stepchild, foster child, brother, sister, nephew, niece, or grandchild. These are the only individuals that the taxpayer can receive the earned income credit from. They have lived with the taxpayer for more than half a year. The dependent can now have provided for more than half of their support, and of course it has to be either 18, under 19 to 23, in full-time college student, or completely disabled, in that it doesn't matter the age. The earned income credit is better known as EIC or either EITC. The amount of credit increases yearly as well as the income range that allowed a taxpayer to receive the earned income credit. As the name of the credit indicates, the taxpayer must have earned income. If they only have unearned income such as unemployment, they do not qualify for the credit. Also, if the taxpayers is dependent on other individual tax return of their filing, married filing separately, they're not eligible for the credit, as well as the income limit of the maximum amount on the credits listed here can also be found on irs.gov. If you notice, contrary to popular belief, you can receive the earned income credit with no qualifying dependents, as long as the taxpayer is between ages 25 to 65, and their income is below the rate. Check the checkbox to attach to Form 8862 if the taxpayer's required due to being disallowed to claim the earned income credit in the previous tax year. If a taxpayer's earned income credit was denied or reduced for any reason, other than a math or clerical error, they must attach a Form 8862 to their next tax return to claim the earned income credit. However, they do not need to file a Form 8862 if they already file 8862 in the later year, and they will grant the EIC for that year, or they take the EIC without a qualifying dependent. The next section calculate the child care credit. In the first box, enter the amount of the child care expenses. In the second box, enter the number of dependents. You see the child care, be sure to enter an amount on this box or it will not get to credit. And in the last box, put in the number of months that the spouse, either a disabled or attended school. If it applies, the child and dependent care credit as a non-refundable credit. This means that it can only be applied towards the taxes residue on the taxpayer's taxable income. This credit cannot be refunded to the taxpayer like the earned income credit, but if applied towards the tax's unearned income, it can result in being refunded income tax that can be paid throughout the year. To receive this credit, the taxpayer had to be paying someone to care for their dependent so that they can work. The dependent should be age 12 and under, or either disabled. The maximum of amount of childcare expenses that can be claimed is $30,000 for one child, and $6,000 for 2 or more children. The amount of credit is up to 35% of their expenses, depending on what their adjusted gross income is. The next section is income. In the following areas enter in the taxpayer taxable income as well as their spouse's income withheld for the taxpayer W-2 income. Now enter the wages, and the withholding form the W-2. This is an example of the W-2. The look of the W-2 may change from client to client, but the number will be same on them. All wages of recorded in Box 1, and federal withholding is in Box 2 of any of the income is from performed. Then check the box. Household employees may not have W-2 for their income if they will be paid $1,900 for the year. A household employee does household work in or out around the home. This can include babysitters, caretakers, house cleaning work, RS domestic worker, drivers, health alders, housekeepers, maids, nannies, private nurses, yard workers. These workers are only household employees if they can control not only what work is done but how it is done. If only the taxpayer can control how the work is done, they are not an employee but is self-employed. Please be sure not to enter an individual self-employed income. It's household help. Although an employee does not have to supply W-2, the income is below $1,900, they still have to remove taxes from their pay, unlike self-employed income. In 6b enter in the spouse the W-2 information, the wages, and withholding, and also check the box if the income is from household help performed. In Box 7, enter the income reported on 1099 int that's int or 1099 deal div. Interest income reported on 1099 int. This could include interest paid on savings accounts, interest, checking accounts, and savings loan. Dividend income reported on 1099 div. This will be the taxpayer was paying dividends from their stocks or mutual fund investment, paying them capital gain distributions. This is an example of 1099 int. The income is reported in Box 1. This is an example of 1099 div. The income amount to enter on the estimated screen is located in Box 1a. In Box 8 enter the self-employment income. This can also be referred to business income. In Box 8a, enter the taxpayer self-employment income. This can also be referred to as Schedule C or business income, will either be reported on a 1099 miscellaneous, or reported by the taxpayer. In Box 8b, enter in the spouse's self-employment income if it applies. 1099 miscellaneous are issued to an independent contractors. The form reports the total amount of payments a taxpayer received from a person or a company that they provide services to. If the taxpayer's self-employment income is self-reported, the client will provide you their income amount, based on their receipts, and personal record keeping. This is the 1099 miscellaneous. A few different types of income are reported on this form. In case of Schedule C or business income, the income will be reported as non-employment compensation in Box 7. Number 9 is to report IRA or pension distribution reported on a 1099-R. There are two sections that can be listed in, a not subject to a penalty, and subject to a penalty. Click the More Info link. It will show you which area to enter the income, based on the code listed in Box 7 on the 1099-R. In the distribution amount, in the federal withholding form, the 1099-R in the correct section, according to the code listed in Box 7. A 1099-R is used to show distribution from retirement accounts such as IRAs, pensions, annuities, SEPs and simple plans. This is a 1099-R. The total distribution received is recorded in Box 1. The taxable amount is listed in Box 2A. Sometimes these amounts may differ. The federal withholding is listed in Box 4. In Box 7 lists the codes that indicates whether the distribution is subject to a penalty or not. Number 10 is for unemployment or taxable state refund. This is reported on 1099-G. In boxes A, enter in the taxpayer's gross amount received in the federal withholding. In boxes B, enter in spouse's gross amounts, and federal withholdings if it applies. Both unemployment and taxable state refunds are reported on 1099-G. The taxpayer only has to report the state refund as income if they took a deduction for paying those taxes in a prior year, in an itemized deduction. This is a 1099-G and employment is reported in Box 1, the taxable state refund is reported in Box 2. Box 3 shows the year that state refund is from, and Box 4 is the federal withholding. In Box 11, enter Social Security income reported in a SSA 1099. The Form SSA 1099 reports any Social Security benefits that the taxpayers collected during the year. If the only income they received during the year is their Social Security, the benefits are not usually taxable. And the taxpayer is usually not have the file attached return, but if they have income in addition to their benefits, they may have to file a tax return, and pay taxes on the portion of their benefits. To determine if the taxpayer's benefit is taxable, take half of the amount of the benefits, and add it to the amount of taxable income, and any non-taxable interest income, if the taxpayer is a single, head of household or widower, and the amount is $25,000 or more, they may have to pay tax on the portion of their benefits. If they are filing married, or filing jointly, and the amount is up to $32,000, or more, they may have to pay tax on the portion of their benefits. If they are married and filing separately, it doesn't matter the amount, they would have to pay tax on the portion of their benefits. This is the SSA 1099, the benefits received are listed in Box 5. Number 12 is for the taxpayer's income from gambling winnings reported in the W-2G, and the first section enter in the taxpayer's winnings, and federal withholdings, and the second set enter in the spouse's winnings from the W-2G and their withholding if it applies. The taxpayer will receive a W-2G if they received 600 or more in gambling winnings and the payout is at least 300 times the amount of the wager. If they received 1,200 or more on gambling winnings from bingo or slot machines. If they received 1,500 or more for Keno, or they received any other gambling winnings that are subject to federal withholdings. This is a W-2G. The winnings are reported in Box 1 and the federal withholding is reported in Box 4. Number 13 is any other income not listed. If you click More Info, it will give you some examples of types of incomes. Most common would be cancellation of debts that is reported in the 1099-C. This is an example of the 1099-C. The amount shown in box 2 should be listed as income. Please watch Refund Estimator Part 2 for the remainder of the training.